everybody. This is Toni Turner, and welcome to the Market Now as of Friday, September 30th at about 2 p.m. Eastern. Well, the NASDAQ rose earlier this morning as Tesla gained on its plans to sharply increase production. Shares of the electrical vehicle maker gained 1.04% after the company announced its plans to push global production of its top-selling vehicles in the fourth quarter. As I am writing this, however, this afternoon, the market has drifted lower. So let's go on to three charts that may give us some insight into the week to come. Okay, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our S&P 500 index. Now, when I captured this chart today, the SPY was trading at $361.14. That's about 36.11 on the S&P 500 itself. It is trading at 24% below the SPY's last all-time closing high back here in January, and that came in at $477.71, or about $477.7 on the S&P itself. Now, we know that since the beginning of this year, the SPY started lower, popped up a little bit in March, then started down again, fell down to lows in May, and we thought maybe this is the bottom, popped its head back up over the 20-day moving average, the red line in May, up to 417, made this consolidation here. And we thought, all right, well, maybe things are getting better, then rolled over real hard and dropped to its June lows on, let's see, where are we here? Down to its June lows here at about 362. So it drew that, it made this line here, and we're like, oh goodness, don't do that again. Bounced back up, consolidated here, little wedge form. Bounced out in July over the red line, the 20-day moving average, the green line, the 50-day, made a very actually slightly attractive. Could have been better if it had been more sustainable at a more of a 45-degree angle, but we'll take it where we can get it. So it did move back up to these August highs here. The SPY moved right up to its 200-day moving average, and it was looking pretty good, although it was getting overbought, as we can see by the RSI, trading over 70. So it did get overbought, bumped its head on the 200-day moving average, and we said if it can get over that, maybe things will get better. It could not do that, rolled over here, and of course inflation started really raising its ugly head again, and the SPY fell in a downtrend. And we kept saying, watch these lows at 362, watch the lows, and here we are today at $361.14, again, at about 2 p.m. Eastern. So in previous weeks, we did talk about this shallow head and shoulder, and that, as we can see here, that took place. And we measured the line here, and if you take the line from the neckline up to the top of the so-called head and then drop it down equidistance, it brings it down to about 390 or so. That was support in here. That got totally moved through, and the SPY fell down again to where it is today at 361. So we are right on this 361, 362 price level here. In the coming week, we really have to pay attention to this level right here. Now, if you look at a longer-term chart, which I do all the time, I look at weekly and monthly charts. If you look at a long-term chart, you say, well, what is under 361, Toni? Under that, we do have price support at about $350 or $3,500 on the S&P 500 itself. So that's the next level down to look for. The SPY here, if we look at the 14-day RSI, it is oversold. That many times means or can mean that the market will rally. There's another kind of example of it back here in June, of course, when it came down, when the SPY came down, and it got oversold here, and of course it bounced. Doesn't mean it's going to happen again. It could bounce quickly and roll over again. A downtrend is a series of higher lows, and I'm sorry, I'm doing that backward. A downtrend is a series of lower highs and lower lows, and we're very definitely in a downtrend now. Now, don't forget, if it does bounce here, there will be a lot of short covering, which will make in for a rally that kind of looks like this one here, where it just goes straight up because you've got buyers buying and shorts covering. When shorts cover, they have to buy. That could happen. It might not. There is absolutely no way of knowing. Please do know as well that looking ahead, we're approaching the third quarter earnings season, which will start in the coming week. So in the first week in October. So we are going to keep an eye on this 362, 361 level, also 350 if we need it in the coming week. So please trade wisely, and do remember that cash can be considered a very good position. Okay, our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. The Qs represent the NASDAQ 100, which is a major index in the market. It's where all the big momentum stocks live, and it's a very important index. Tesla, of course, is part of this index. Apple, Amazon, Netflix, that whole group. Tesla didn't have much. It was up earlier on the day because of Tesla, because Tesla is big market cap in the Qs. But again, we're down again now today, this afternoon. So today, actually, the QQQ is trading at 32% below its all-time closing high way back in 2021 in November 19th at $403. You can't see that on this chart. It is in bear territory. Again, any stock or asset that trades below 20% or more below its all-time high is considered to be in bear territory, and this is where we are. Now, the June, I told you it did make an all-time closing high way back here where you can't see in November at 403. Then it fell like the S&P does. Many times they have kind of similar chart patterns. Rose up in March like the S&P did, rolled over probably even harder than the S&P did, and back down to its June lows at about 269. So from there, it rallied up, started up making higher lows. That's always a good thing. We found in July that the 20-day crossed over the 50-day. That's always a promising move. Now, it did get more steep here, which can be a little bit of a warning to traders. You ride it while you can, but you know it's going to roll over because this kind of angle isn't that sustainable. And it did roll over, and again, we know we're back down here at 269, 270. So yesterday's low was 268.84. Our next price support, if you look at a longer-term chart, is about 250, 251. We've got our red line here at 268, 269. Please know that, guys, inflation can make our goods more expensive overseas, and of course that includes technology. A lot of technology we sell overseas. Stronger dollar will do that, makes our goods more expensive over there. So that's part of the reason that we're trading at these lows here. Of course, there's a lot of reasons. So do be very wise, please, going into next week. Again, it will be third quarter earnings season. Please trade very carefully and consider using hard stops on all of your positions. Okay, our final chart today is one we haven't looked at in a long, long time. I kind of wanted to, my personal desire here is to kind of walk away from the stock market for a few days and look at something that doesn't have anything to do with the stock market. The word stock certainly does the financial markets. And I'm watching this Tecrium Wheat Fund, the WEAT. Now, the WEAT consists of wheat futures. It is a commodities fund. It's not an ETF, it is a fund, and it's made up of wheat futures, okay? Considered to be a commodity fund. Now, if you trade these, there's the wheat, there is the corn, the CORN, that's obvious, and some others. I like this pattern the best of the commodities right now. Now, the wheat or any other commodity fund is easiest traded in a tax-advantaged account like an IRA, only because profits from commodities that you make on commodities are taxed differently by the IRS than stock accounts are, regular stocks. So if you don't mind, or your bookkeeper or accountant doesn't mind figuring out, hopefully, your profits, they're taxed in a slightly different way, but it's just something that needs to be known at tax time. Otherwise, you're good. I just always trade them in an IRA because it's easiest. Now, about the wheat fund, a little bit about it. You won't be able to see this on this chart, of course. The WEAT initiated in September 2011. That's when the fund first started. It made its all-time high in August of 2012 at about $25. It fell since then, and again, you can't see that on this chart, to its lows in September of 2019. You can't see that either on this chart. This chart goes back, as you can see, to the first of 2022. So, but it did fall to lows in September 2019 at about $20. Now, it gradually rallied from there. And you can see that it rallied up here in 2022, in February of 2022. It moved up dramatically into March of 2022 and moved up to $12.75. It came down to about $9.75 or so. It made this kind of move here, then started up here. Excuse me, I didn't get that straight. And it moved up to these highs here, up here a little over $12, then fell back down again. And a lot of these moves had to do with wheat and Russia and the Ukraine, as the Ukraine is quite sells quite a bit of wheat. Then it fell down from there, and it fell back down through its 20-day, its 50-day, back down through the 200-day, then finally made a low down here in August at $7.63. So again, these moves had to do with Russia and Ukraine, and we are still going to see how that works out. Now, when I captured this chart today, the WEAT was trading right here just under its 200-day moving average. It has broken above its 200 today. Right now, it's trading at $9.17. And again, I am looking at this because commodities don't usually follow the S&P 500 or the NASDAQ. They trade on their own supply and demand. And right now, that looks attractive to me. So right now, the WEAT, it had come down here to these August lows, down to 7 and change, as I said, moved back up, walked along the 20-day moving average, and that's what it's doing right now. It's bumping its head on the 200-day moving average. The 50-day moving average is right below the price move up here, kind of consolidation, but a positive consolidation, trying to break out today. So today already traded 2.166 million shares. This is still not a day trading vehicle. It doesn't have the breadth for that, but it looks like it might be something worth holding for a while, of course, if it behaves in the coming week. So if in the coming week, if the WEAT stays above the 20-day moving average and certainly above the 50-day. Now, the 50-day is coming in here at $8.44. The 20-day is coming in here at $8.76. So if it remains above these lines in the coming week, and if it can, again, if it can remain above these lines in the coming week, and better yet, if it can move above the 200-day moving average, I may add shares of the WEAT to my trading portfolio, and my initial stop is going to be down here under the 50-day moving average at $8.40. Then, if and when the WEAT moves above $9.70, I may then add to my position. So that'll mean it broke out of this consolidation and this down move here. That could be positive. So you might want to keep an eye on the WEAT in the coming week. Okay. Well, please know that this is a perfect time while the market's being cranky. It's a perfect time to take some time and invest in yourself. Invest in your trading skills. Take a few minutes to check out my online training programs and see how you can become a better trader. These programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, a really good thing to have right now, how to trade the trend to profits, which is great for when the market does bottom and start up. This will be an invaluable training to have. Plus, 3 winning setups, how to read charts, and again, for this time, really good thing to have, just like Trade the Trend to Profits, is Bottom Fish Like a Pro. These programs are timeless, and they can help you increase your gains quickly and easily. Plus, they're low priced. To see all of my online training programs, simply go to the link on this screen up here, or easier yet, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.